Hey there, YouTube family. Happy Sunday to you. I'm going to talk about why are these markets selling off and what can we expect in the coming weeks. So, hey, NASDAQ has been down 30% from its recent highs. The S&P 500 dipped down 20.9% into official crash territory, but ended up closing the day above crash territory. Anything greater than 20% is an official crash. So right now we're still in a pullback. The Dow is on an 8-week straight losing streak, okay? The last time that happened was 1923, and Bitcoin is also on its 8-week straight down red candle, which is unprecedented. I looked back in the charts and I didn't see another time frame in which we had that many straight weeks down. And so it's important for us to understand something about the markets, right? The markets are designed to cause the maximum amount of people the maximum amount of pain. And so right now we have been seeing this large swing over into safety. And one of the areas where people have been going is in bonds. And that is right now yielding one of the highest rates of return that we've seen in a long time. It's actually right now a 9.62% annual rate through October of 2022. That's unprecedented. So just to give you a brief explanation, when the bond rates go up, the stock market typically goes down. But what's happening is so many people are moving to safety. And a lot of the hedge funds, which are moving this market and are often the ones who just go, promising the greatest returns to their customers, who just go deeper and deeper in the direction that the overall market is going. And that's what's classically referred to as greed, right? These are the ones who are getting caught. So, what's happened in the last couple of years is a number of large tech funds have been caught over investing into tech. In particular, Melvin Capital has lost $7 billion last year shorting GME. And so that's pretty much put them into a position where they're needing to reorganize because you have their customers are beginning to come back and look for the redemption of their money. So they're having to sell quality companies, quality tech companies, which have been having given great returns for the last 10 years. They're having to close those positions, even if they don't want to, because they have redemptions coming from their customer base. In addition to that, we saw Tiger Global has lost $20 billion in tech, being over leveraged and going long tech. And that's a pretty major problem. Again, they had been reporting that they had actually 20x'd their capital investments over the last decade. So they were just one of the fastest growing hedge funds in the world because these guys were offering incredible returns on the incredible risks they were taking. And so what we've just had in the last week is the market getting pushed down lower simply because there are companies having to reorganize. You guys are not the only ones. I've been talking to you about rebalancing. Some of you are in the red. Some of you guys have had margin calls. Some of you, everything you own is down. And, they always call the retail market the dumb money. But the truth is, it's not the retail market that's dumb money. It's anybody who gets caught up in greed. That's the dumb money. Warren Buffett has been famous for saying, buy when there is blood in the streets and sell when others are greedy. And so what's happened here is two large hedge funds got caught overexposed and are now having to sell good companies to handle the fallout of those bad decisions, those greedy decisions. So, so does that mean, Josh, that tech still has some life in it, right? Well, let's look at Cathie Woods, right? And Cathie Woods has, she has been a unique investor. She's gone the opposite of Warren Buffett, and people have said that she's been, she believes fundamentally that we are on a turning point where technology companies are going to disrupt industries, markets, or they're going to tie together, global markets, and they're going to essentially be the leaders in wealth production, like companies like Amazon and Apple, for decades ahead, right? And so right now they're getting punished because because of that greed. But interestingly, even though Cathie Wood's ARK Investments has dropped 45% this year, actually close to $1 billion of new money has flowed into her company to go under her management. So it's not necessarily that the idea of tech being the area to invest in is failing, right? It's more that money is being moved around. So hedge funds that have done it poorly are getting punished. People are pulling their money out, and yet there are people who are believing that it's time to buy Cathie Wood's funds, that she is right. There is going to be these companies are going to change industries globally and produce great returns and wealth ahead. So let's talk about Warren Buffett, right? So he's the contrarian to most of the market. He didn't get caught in the tech bubble. He tends to buy companies like Coca-Cola and McDonald's and companies with great dividends. So what's he doing? Well, interestingly, Warren Buffett has been on a spending spree, which in of itself tells you, what does he say? He says buy when there's blood in the streets. Well, 8 consecutive weeks down on the Dow. Clearly there's blood in the streets, and he went out in this last quarter, spent $51 billion in new investments. So what did he sell? Well, he was selling big pharma. And so I'll just point out to you guys real quick, that's a little bit of a signal that, that big pharma has had its run. We had a lot of companies that spiked during this COVID season that we all went through in the last couple years. And he is pulling out of big pharma, but he's actually putting money in, some of his money is going into tech. He's buying Apple. And so, when you take a step back and you look at what's really going on, yes, tech's being punished. Yes, the NASDAQ is 30% down, definitively into crash territory, but you got money going into Cathie Wood's management, and you got Warren Buffett buying Apple. And so we got to ask ourselves, what do we do with that, right? Well, I'm going to take a step back. I'm going to talk to you guys about bonds. I want to remind you, what did I say? So the stock market's designed to punish greed. It's designed to hurt the most people at one time. And what you're finding is that people are pushing into bonds and safe investments, and bonds are offering the biggest return. And you got all these companies and hedge funds which are going long and getting leveraged long into safety right now. And what would actually cause the biggest upset right now in the stock market would be for the bond prices, would be for that to begin to sell off, right? That would actually create, an upset right now. And it's actually when bonds are selling off, that's actually good for the stock market. So we're going to be keeping our eye out for that as a strong signal to increase our investments into the NASDAQ and into the markets. Hey, if you guys have not been participating in the small account challenge, the Verb moomoo small account challenge, I think it's going really well. We're profitable. We've been profitable this last week. We're going to take a deep dive into that tomorrow. Monday's our day for a deep dive into Verb, so I can answer some of your guys' questions about what are we doing, what are we looking ahead, how do the charts look. If you're not participating, go to the description of this video, hit the link for moomoo, download that. Start off by putting $200. You're not too late. We're going to continue to evolve these challenges moving forward. I am imagining that the Verb challenge has been going well, and I'd be really excited, like all of you, to see that come to a conclusion, and we're going to go right into a new challenge after that. I do have great trade setups that I would love to share with you guys. So if you're not in the Verb challenge, download moomoo. You can watch a couple catch-up videos, and you'll get a new update tomorrow on the Verb challenge. So I just want to thank you guys for letting me be part of your financial journey. I hope you all have a restful Sunday, and I look forward to seeing you in the next video. Bye-bye.